Nifty faces a critical breakdown level at 24104. What will determine today's market trajectory? Welcome to Trade Vision Pre-Market Report. Good morning, traders. Welcome to Trade Vision Pre-Market Report. Today, 2026, July 17th, Friday, promises another vibrant, warm, and positive trading day. Let us deep dive into the detailed reports. The US Trade Representative is implementing a 25% tariff on a broad range of Brazilian imports, effective July 22, citing unfair trade practices, a move Brazil vows to counter. This trade escalation could weigh on global sentiment, potentially impacting emerging market capital flows and putting the spotlight on Indian export-oriented sectors with global trade ties. India's cabinet has approved a substantial Rs 1.27 lakh crore for the second phase of the India Semiconductor Mission, alongside significant outlays for mobile phone manufacturing, new highway projects, and urea plants totaling approximately Rs 2.5 lakh crore. This robust push towards technological sovereignty and infrastructure development could lend strong support to manufacturing, capital goods, and electronics sectors, putting the spotlight on companies positioned in these strategic areas. The Reserve Bank of India has issued new prudential norms prohibiting banks, small finance banks, and NBFCs from selling specified non-financial assets acquired during stressed loan resolutions back to the defaulting borrower or related parties, effective October 1, 2026. This action reinforces asset quality and transparency within the financial system, potentially driving a more stringent approach to recovery, which could see some tightening in credit for distressed entities while shoring up lender balance sheets. The Government of India is conducting an underwriting auction today for the reissuance of government securities totaling Rs 32,000 crore across three different maturities, 2029, 2033, and 2055, utilizing a multiple price method via the RBI's e-Kuber system. This substantial government borrowing program keeps the bond market in focus for today's trading, potentially influencing short-term liquidity and bond yields, and could subtly impact overall investor sentiment regarding interest rate expectations. Renewed US-Iran military confrontations have intensified, notably impacting the vital Strait of Hormuz as a bulk carrier sank and an oil tanker was reportedly struck yesterday. Brent crude extended its rally, climbing past $80, with the disruption fueling supply concerns and potentially reigniting global inflation pressures. This escalation could weigh on India's energy import bill, putting the spotlight on OMCs and inflation-sensitive sectors. Economists are increasingly concerned about a super El Niño weather cycle, with warnings of a severe shock to global food prices extending into 2028. This naturally occurring phenomenon, already causing rainfall deficits in parts of India, exacerbates existing supply chain woes. The prospect could keep food inflation elevated and could weigh on consumer discretionary spending while highlighting agricultural and FMCG stocks. The upcoming MSCI India Standard Index rebalancing, set for an August 12th announcement, could trigger an estimated $2.3 billion in passive investment flows into Indian equities. This development puts a spotlight on high-probability inclusions like Adani Green Energy and GrowValue, potentially lending support to these stocks, while companies such as Astral and SBI Cards face exclusion risk, which could weigh on their near-term performance. Wipro has reported a marginal rise in its consolidated net profit for the first quarter of fiscal year 2027. This mixed earnings report for a major Indian IT services firm keeps the focus on demand trends within the technology sector, particularly for AI-driven modernization deals. The performance could read through to investor sentiment across Indian IT stocks as the sector navigates evolving global economic conditions.
You are watching Trade Vision! Smash that subscribe and enable the bell button right now. Like and share this video. Comment your love and share your happiness. Let's win together!
Foreign institutional investors sold a net 4,205.56 crore rupees. Domestic institutions bought back a robust 2,986.41 crore rupees. DII buying is likely offsetting much of the FII outflow, suggesting a resilient domestic market. If we look at yesterday's sectoral data, we see a clear rotation with money moving into Nifty consumer durables, which gained 1.48% yesterday and boasts 3.42% weekly momentum, alongside Nifty media, up 1.18% with 2.53% weekly momentum. Conversely, funds are flowing out of Nifty Realty, down nearly 1% yesterday with a 3.46% weekly trend, and Nifty Metal. Let us look at global events. India's Consumer Price Index for June 2026, released on July 13th, came in at 4.38%, beating the street's expectation of 4.30%. India's Index of Industrial Production for May 2026, released on June 29th, grew by 5.1%, beating the 4.7% forecast. This strong industrial output is positive for Indian equities, especially manufacturing and capital goods, signaling healthy economic momentum. The Reserve Bank of India's Monetary Policy Committee will convene from August 3rd to August 5th. While a status quo on rates is expected, the recent higher inflation data will be crucial. The outcome will directly influence Indian interest rates and liquidity, impacting banking and real estate sectors. The US Consumer Price Index for June 2026, released on July 14th at 6 p.m. IST, came in at 3.5%, missing the 3.8% forecast. The US Producer Price Index for June 2026, released on July 15th at 6 p.m. IST, showed a 5.5% increase, missing the 6.2% forecast. This sharp decline in producer inflation reinforces a disinflationary trend, benefiting global risk assets and potentially strengthening the global market. Saw mixed signals overnight. Hang Seng and Jakarta rose over 1%, but significant declines hit Nikkei and Shanghai. US futures were down across the board. Indian traders might see a steady opening, but global caution persists. Now let's move on to some Indian listed stocks highlighted in today's news updates and what's driving their movements. Leading today's focus is Calibre Mining and Logistics, with its initial public offering opening for subscription today. 197 Communications, Paytm's parent company, is also in focus as its board considers a bonus share issue and reviews first quarter results. Next, ABB India surged up to 10% on the BSE, hitting a 52-week high, driven by strong quarterly performance from its parent company. Bharat Heavy Electricals, or BHEL, will trade ex-dividend today. Finally, Wipro is watching its first quarter earnings announcements, keeping the... Let's check what the RAS levels are saying for Nifty today. The breakout level to watch is 24121, while a breakdown below 24105 would be significant. Should the market turn bullish, resistances are at R1 24180, R2 24239, and R3 24299. Conversely, if the market declines, support levels are S1 24045, S2 23986, and S3 23927. Today's CPR sees the top at 24118, pivot at 2413, and bottom at 248. Analyzing the options matrix and derivative distribution, we observe the structural anchoring of the max pain point at 24,100 for the 2026 July 21 expiry, aligning with the prior session, despite a marginal uptick in the PCR from 0.744 to 0.766, signaling a persistent range bias with potential for short covering above 24,200. This dynamic positions 24,200 as a formidable supply wall with maximum call OI, while robust demand at 23,000 suggests a tactical support floor, delineating the immediate trading boundaries. The India VIX closed at 12.88, reflecting a 2.94% fall from the previous close of 13.27. The 5-day trend is mixed. With VIX falling while Nifty is at higher levels, this indicates lower volatility and a less fearful market, potentially supporting Nifty at current levels. The CPR is positioned at TC 24,118, Pivot 24,103, BC 24,088, expecting normal movements in the market today. Gift Nifty opened at 24,118, which is a flat opening of 23 points compared to Nifty's previous close of 24,095. This flat gap suggests that Nifty could also open with a similar lack of strong directional bias, implying a potentially range-bound start to the session. The no-trade sideways zone is between 24,105 and 24,121, where trading is likely to be directionless. A move above the breakout level of 24,121 could yield an upside of 116 points, reaching 24,237. Conversely, a move below the breakdown level of 24,105 could yield a downside of 196 points, reaching 23,908. Previous trading day, Nifty moved minus 69 points, which was bearish. The weekly move stands at 33 points, and the monthly move is 175 points. The close did not sit tight against either extreme, indicating no strong directional carryover signal into today. And now, the moment you've been waiting for. Today's final market verdict. Indian markets are set for a session that leans mixed to negative, despite some underlying domestic strength. Yesterday saw key indices like the Nifty and Sensex close largely flat to negative, with the Nifty down just 0.02% at 24,072, both indicating a bearish bias below their breakdown levels. Nifty futures experienced what's called long unwinding, with prices down by 20 points and open interest falling by over 617,000. However, the future is trading at a bullish premium of 27.25 points above the spot Nifty. Option data shows the Nifty in a range, with maximum pain at 24,100. There's heavy call writing at 24,200 and 25,000, creating resistance, while put writing at 23,000 and 24,000 offers support. In a contradictory signal, all major indices, including Nifty and Sensex, are showing a bullish bias on our custom RAS EMA trend signal. Sectorally, consumer durables were the top gainers, up 1.48%, while Realty was the biggest laggard, down nearly 1%. Globally, the sentiment is largely negative, with US futures and most European and Asian markets down. However, the Gift Nifty is showing a flat open, suggesting a potentially resilient start for our domestic market. Foreign institutional investors sold over 4,200 crore rupees, but domestic institutional investors provided strong support by buying nearly 3,000 crore rupees, absorbing much of that selling pressure. And that wraps up today's Trade Vision pre-market report. Don't miss a beat. Please subscribe and hit that notification bell for your daily updates. If you found our insights valuable, a quick like and share really helps us grow. We'd also love to read your comments and advice below. Have an incredibly profitable and bright day ahead.